Hello, this is Bruce Wan, Head of Research for MaxCap Group. In this video, I want to talk about the housing market in Melbourne, specifically what has been happening, why was it happening, and most importantly, what is the outlook like for the next year. It has been a strange and unusual cycle for Melbourne. The Melbourne housing market has underperformed the rest of the country, not just by a little bit, but by quite a lot. Over the past 3 years, housing prices in Melbourne fell by a total of 6%, at a time when we saw modest price gains in Sydney of around 5% and booming price gains in Brisbane, Adelaide and Perth of around 35 to 50%. This pattern is unexpected as it overturns its traditional position as the second most expensive capital city market in the country. It's a little odd to hear that prices in Melbourne are now lower than Brisbane, Adelaide, Canberra today and likely to be lower than Perth by the end of this year. There are many reasons for this localised downturn. From an economic perspective, the City of Melbourne and the State of Victoria have had a rough couple of years. A prolonged downturn and an uneven opening have really diminished the economic recovery. Even now, business conditions are relatively weaker and unemployment rates are relatively higher compared to the rest of the country. With a weaker economy and higher state debt, we have seen a lot of new property taxes being imposed onto the Victorian market, which have further reduced investor appetite and transaction flows. However, there are several reasons to be a little bit more upbeat about the Melbourne market later this year and into the next. Looking at this chart, you can see our model-based projection for Melbourne housing price growth. What is sitting behind these numbers? Housing demand is running strong, population gains are still quite robust, even if it is moderating a little. What was a steady outflow of people interstate is now slowly stabilising. Melbourne is still very much under supply for housing. Meanwhile, housing is looking relatively more affordable in Melbourne compared to other Australian cities, especially compared to Sydney and Southeast Queensland, the traditional destinations for people when they leave Melbourne. Most significantly, interest rates are falling. In Australia, this is the key trigger for market upswing. The rate cuts we've seen so far this year and the expectations of more rate cuts ahead, we do expect this to drive a cyclical pickup in sales volumes and price growth over the next 2 years. So after a number of challenging years for Melbourne, we are starting to see a road to recovery for the local housing market, with lower mortgage rates, firm demand and better affordability being the key catalyst for this turnaround. You can read more about this topic on our website. If you want to discuss the potential opportunities in this local market, talk to us and the Capital team for more details. This has been Bruce Wan from MaxCap Group.